Businesses are feeling the brunt of the economic slowdown, with trading conditions getting tougher. The Federal Treasury is optimistic that inflation is coming back under control, and how McDonald's and other fast food rivals stared down the naysayers and went from strength to strength. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Tuesday, the 14th of May, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Now, Sean, immediately after the show, you have an interview coming up today with Andrew Lampertang, who is the Managing Director of Management Consulting for Publicis Sapient.
Sure did. Andrew and I talked about the banks and the relationship with consumers, and they've done a survey recently about how consumers think about banks, and we talked about stuff like branches and cash. It was just really interesting what the survey turned up about the relationship between customers and banks. So we don't kind of see them as this big macro organization. It's very much about an individual relationship discussion. Fascinating from Andrew.
Yeah, and whether the banks have even recovered essentially from the Royal Commission, which I thought was interesting, and what we expect from the banks. And as a customer of banks, I found this really interesting. So it's coming up after the show. It is well worth a listen. It's also worth heading along to fearandgreed.com.au and signing up for our newsletter. It comes out tomorrow, Sean, and basically it is your thoughts, your inner thoughts, which sounds a bit scary, doesn't
it?
Inner
thoughts. Not quite. It is. I mean, obviously tomorrow, I'll write a lot about the budget because tonight's a big night for the federal budget, but there'll be other things too, just my take on a number of issues, which, well, at this early stage, 24 hours away, I can't quite tell you what those issues are, but they'll be very relevant, I'm sure.
Yeah, and if you want exclusive and unrivaled access to Sean's inner thoughts, head along to fearandgreed.com.au and pop your email address in, and you'll get it mid-morning tomorrow, if you dare. All right, on with the show, Sean. The main story this morning: businesses are finding trading conditions a bit tougher and are slowing down new hires and seeing a drop in sales orders in coming months.
The National Australia Bank monthly business survey says business conditions are now back to long-run averages, and while business confidence is steady, it's still below the long-term average. National Australia Bank Chief Economist Alan Oster said the April survey marks a milestone, with conditions no longer better than average, demonstrating how much the economy is slowing. While conditions in the finance, business and property, transport and recreational services remain pretty good, it isn't the case in retail. It's the real weak point for businesses. Mr. Oster said it's worrying for the economic outlook that forward orders have fallen, though businesses are still investing. That's the good news. The survey also shows some positive signs in terms of inflation easing. The NAB survey gives a great look at different segments of the economy, and the overall take is that growth is certainly slowing, as is inflation.
So that's the business part of the economy. We also got a pretty good look yesterday at the consumer side, with new Commonwealth Bank figures highlighting the growing divide between homeowners and renters in particular.
Yes, so the monthly CommBank Household Spending Insights Index fell last month, with spending growth over the past year just 2.6%.
I'm not laughing at you, Sean. I'm laughing at the CommBank Household Spending Insights Index. I understand what it is. It is crystal clear from the name what it is, but can't you CommBank call it like CommBank Spendathon or something like that? It just really cuts through.
So the CommBank Spendathon uses real-time data from card transactions across the bank, so it's more up to date than, let's say, Australian Bureau of Statistics release. So it's fascinating. It is. When you talk to CommBank economists, Gareth Aird and Stephen Halmarick, they have at their fingertips this data about what's happening in the real economy. And that's kind of what makes this survey so interesting. It says, while spending on essentials like education, utilities and motor vehicles has risen, consumers are pulling back on hospitality, food and beverage and recreation. But where the real disparity kicks in is between renters, where spending growth is up just 1.3%, and homeowners, who spent 6.3% more. That's a massive difference between the two. Victoria is one of the worst performing states over the past year or so, while the greatest strength is in Tasmania, South Australia and New South Wales.
Sean, I can hear the excitement in your voice, and I suspect it is in fact just excitement, like early excitement for the budget tonight. Am I correct?
Totally. It's pre-budget.
Yeah, you just got the pre-budget jitters. It's
That's
just
it.
very exciting. Yeah. Local markets, how did they perform yesterday? Did they have the pre-budget jitters as well?
Yeah, absolutely nothing happened. Like the number that closed up 1 point to 7,750 points. It's not fair to say nothing happened, but trading was in a very narrow range ahead of tonight. Consumer discretionary stocks did best, while consumer staples also outperformed. Energy and tech stocks were among the worst performers. Among the large caps, the Commonwealth Bank, Wesfarmers, Woolies and WiseTech Global all finished up 1%. Woodside and Rio both closed down 1%. ANZ and Macquarie Group both went ex-dividend, falling 3% and 1.6% respectively. In corporate news, construction group Fletcher Building was the biggest laggard after cutting earnings guidance for fiscal 2024 due to a notable slowdown in house sales in New Zealand and a weaker Australian property market. It was also hit by a court judgment of, and I quote, no substantive findings in its claim against subcontractor works that allegedly caused significant fire-related damages. That's a loss for Fletcher in this case. Fletcher's share price closed down nearly 11% yesterday. Another one I should just mention, we talked about them last week, AVZ Minerals, it delisted from the ASX yesterday, 2 years after its share price was suspended. Of course, the company has been in dispute for control of the world's largest hard rock lithium deposit in Africa. It had more than 21,000 shareholders, paper worth of $2.8 billion, probably not getting any of that back.
And what's happening in international markets?
Well, oil prices have fallen again amid signs of weak fuel demand in the US. Brent crude's trading under $83 a barrel, its lowest level in 2 months. Gold's flat, with an ounce of the precious metal fetching $23.50. Bitcoin's worth around $61,000 a unit, and the Aussie dollar's buying around 66 US cents.
All right, we'll be back in a moment with the rest of the day's business news. Sean, tonight's federal budget is likely to forecast inflation falling back to within the Reserve Bank's target range by December this year, which would be good news in terms of interest rates and the cost of living crisis.
The reason we have interest rates at 12-year highs is to get inflation back in control, and Federal Treasury's forecast will show inflation dropping to 2.75% by December. That's December this year. It will stay at that level into next year and eventually drop to 2.5% by the end of 2025. These are just forecasts, but it does demonstrate that Treasury has confidence inflation is getting back in control. Probably more confidence than what the Reserve Bank has, or at least based on the numbers, Treasury is more confident about it. Of course, when inflation comes back into control, the Reserve Bank's likely to lower the official cash rate, sending other rates on mortgages, personal loans, credit cards, etc., all lower. Treasury will also forecast that the unemployment rate will rise from 3.8% today to around 4.5% over the next 12 months. But Finance Minister Katie Gallagher said the job isn't done yet and the budget will alleviate cost of living pressures.
Yeah, we'll have all of the news on the budget tomorrow morning, including a special interview with our resident economist, Stephen Koukoulas. He is one very excited human right now.
He's jittery. He's more jittery than anyone.
Oh, yeah. Between the two of you, you just kind of...
Jitterbugs.
Yeah. Oh, well played. Sean, serious story, this one. Videos showing the stabbing of a Sydney bishop have been allowed back on social media site X globally after the federal court refused to continue orders barring them from view.
The decision yesterday morning is a blow for the government, which had attacked ex-owner Elon Musk over his free speech stance towards the videos. The E-Safety Commissioner had persuaded the court to issue an emergency ruling last month ordering the videos to be hidden around the world in a hearing that was at too late notice for X's lawyers to properly engage with. Now, on Friday last week, X's lawyers argued that the videos were not sufficiently graphic to ban globally, that X had already taken steps to block them for Australian users, and that the Commission had not followed legal processes in demanding X hide the videos in the first place. The videos were also widely available elsewhere, X's lawyers noted, and then the decision yesterday to allow those videos back on X.
Sean, casino group Star Entertainment was leaderless and susceptible to criminal exploitation as it lagged more than a year behind in remediation efforts, the Bell 2 inquiry heard yesterday.
Counsel assisting the inquiry, Casper Condi, said a $3.2 million fraud committed against Star last year involving malfunctioning cash machines showed the company was still vulnerable to criminal activities as the ranks of its senior executive team remained depleted. Mr. Condie, in closing oral submission, said the fraud, which allowed winning gambling tickets to be reused in ticket-in, cash-out machines, was committed by 18 people who undertook 1,800 fraudulent transactions. The inquiry, the second by Adam Bell SC into whether Star is suitable to retain its Sydney casino licence, heard the fraud was a failure of internal controls at the company. Now, according to a report in The Australian, Mr. Condie said it may not be possible to decide a time when Star Entertainment will be suitable to retain its Sydney casino licence, referring to a lost 14 months in the company's reform efforts since Mr. Bell's first inquiry.
Property giant Lendlease said it has been hit with a $112 million tax bill after a whistleblower alleged that it's double dipping on tax benefits for its retirement living business.
So Lendlease said it had been issued with a statement of audit position and an amended tax assessment relating to an audit of the partial sale of the retirement living business back in the 2018 financial year. Now, the particular statement relates to the sale of 25% of a retirement living trust. It got about $450 million. It sold it to a Dutch pension fund called APG. Lendlease yesterday said it's confident of its position and will dispute the amended assessment, adding that further sales, so where the assessment's about the 25%, it then went and sold another 50%. That hasn't attracted amended assessments, and Lendlease said that is significant and it believes that its position is fine. This has been an ongoing issue for the group, with former external tax advisor turned whistleblower Anthony Watson alleging Lendlease is still under-reporting potential tax liabilities. Obviously, that hasn't been proven. If that is the case, there's a potential for the ATO to impose pretty heavy penalties on Lendlease as well. The upshot, Lendlease's share price closed down 3.5% yesterday.
We talked a bit about this one yesterday, Sean, and it continues to develop. ARN Media is scrambling to revive its attempt to buy rival Southern Cross Austereo after its partner, private equity group Anchorage Capital, pulled out of the deal.
ARN yesterday said an indicative proposal was on the way for the company to buy the same radio stations and brands from Southern Cross as under the previous deal, and also take digital audio assets in exchange for shares. Now, under that original deal, ARN would have taken Southern Cross's KISS and Triple M radio stations along with dozens of regional stations. Anchorage Capital Partners would have received a smaller number of stations, and the Southern Cross regional TV networks. That fell over the weekend. This is the new deal from ARN. ARN Chair Hamish McLennan said a deal would deliver a business of scale necessary to compete against global platforms. Southern Cross, not so sure about that idea, because they said it means shareholders will end up with interests in two competing media businesses, one of which will be well and truly subscale. It would also reduce SCA's exposure to digital media.
And the corporate regulator, Sean, is investigating ANZ over its execution of a long-term Australian government bond issued last year.
Slightly pointy-headed, this one. Very relevant, Michael. Slightly pointed-headed. The Big Four banks explained that it had been appointed by the Australian Office of Financial Management to act as a risk manager in relation to the issuance of 10-year Treasury bonds in 2023. That particular trade is now subject to a formal investigation, with the Australian Securities and Investments Commission investigating suspected contraventions of the ASIC and Corporations Act. ANZ said it's fully cooperating with ASIC.
I know it's very important, Sean. But you know how I like to dabble in marketing and kind of suggest better ways to present things.
Yes.
So please don't be apprehensive about this. Bonds.
Mm-hmm.
Do you think more people would be interested in them and more excited about it? I know it's important and very worthy. If they were instead called James Bonds.
Maybe what you could do, right, is James Bond would be the government bond, but then you have a corporate bond.
Oh.
So, like, you could have a government bond is kind of the most secure, risk-free one.
So then you have James Bond.
The James Bond. Then you have the corporate bond.
Yeah.
I have absolutely no what sort of bond that would be.
Well, what one would you class as an Allen bond?
See, that would be the high-risk, high-yielding, once known as junk bond.
Gotcha.
Would be the Allen bond. And so you got James Bond at one level, Allen Bond at the other. Sorry, Allen Bond, but, you know. And then in the midst, you'd have to have Oh, anyone else that know any bonds out there?
Bond Street, because Bond Street's a respected street, isn't it? I mean, it's on the Monopoly board. It's one of the green squares on Monopoly, so I could always consider that to be
That's probably, maybe Bond Street would actually be the government bond, and then the investment grade bond would be the James Bond. Like, you're pretty sure everything will be okay, but not totally. I mean, based on that last movie, poor ending.
Oh, spoiler alert there, Sean. This has got legs. I mean, I know that I don't want to trivialize things here, but
no, of course not.
But this has legs. This is seriously promising.
Yeah? Really?
Thank you for your confidence in me, Sean. Shall we move on to international news?
Yes, I think so.
President Joe Biden will quadruple tariffs on Chinese electric vehicles and sharply increase levies for other key industries this week, framing the measures as a defense of American workers in an election year. This feels a little bit kind of Trump-esque, doesn't it?
It is. I mean, obviously, this is happening in an election year, as you just mentioned. It probably doesn't have a huge effect on the Chinese economy as such. So Biden will hike or add tariffs in targeted sectors after nearly 2 years of review, according to Bloomberg. The total tariff on Chinese EVs, for example, will rise to 102.5% from 27.5%. Other tariffs will double or triple. The administration has spent recent weeks finalising the measures, including which items to hit, which to avoid. Some are actually inputs into American products, so they're needed, so they're not going to be hit with tariffs. For example, items used in the US solar industry will be excluded. Biden's plan for more tariffs is probably mostly symbolic, as China doesn't rely on US consumers in many of those targeted sectors. Even Chinese EVs, they were sort of locked out of the US market years ago by the existing tariffs that were put in place, or by the tariffs that were put in place, the 27% one. But it is certainly symbolic because Biden wants to look tough against China in the election year.
Finally, Sean, I mentioned this one at the top of the show. This month marks the 20th anniversary of the movie Super Size Me. Have you've seen that one, wouldn't you?
Yeah.
Where director and star Morgan Spurlock, he ate only McDonald's for a month to demonstrate the ill effects that the fast food chain had on people. The movie was a big hit. It grossed $22 million on a $65,000 budget. That's not a bad return, but it did little to stop the growth of McDonald's and fast food more generally across the USA.
Yeah, so the film itself worked somewhat, with McDonald's discontinuing its super-sized menu 6 weeks after it was released, and awareness of the dangers of too much fast food was certainly raised. But 20 years later, McDonald's is much bigger than ever before, 42,000 locations around the world. In fact, in the US, there are about 40 fast food chains with more than 500 locations each, according to a report in the New York Times. Fast food is now the second largest private employment sector in the country, in the US, after hospitals, and 36% of Americans, about 84 million people, eat fast food on any given day. The three major appeals of fast food are the same as they've always been: cheap, convenient, and taste. The share price of McDonald's is up nearly 1,000% since Super Size Me came out. That's twice the return of the broader S&P 500. In the end, in that battle, McDonald's has won hands down.
I had no idea that fast food was the second largest private employment sector, but behind hospitals. Fascinating.
Yeah, well, I mean, the hospital system in the US is private. And so the hospital system here is one of the largest employers in the country. So, same deal.
Goodness me, I learn a lot on this show. I feel like I'm trying to redeem myself after that
bonds.
James Bond nonsense. Up next, Sean, is the Fear and Greed Daily Interview. You're speaking to Andrew Lampertang, Managing Director of Management Consulting for Publicis Sapient.
Yes, all about the relationship between banks and consumers. Now, I actually worked with Andrew many years ago at Fairfax, and he was always, tech savvy. Those guys in the office, you think, he knows what he's talking about. What I loved about this interview, I loved what he told me, but I also like the fact that he always carries cash just in case. I'm well past that.
Yeah. Does that make you more technologically advanced?
Totally.
Might be the only time in your life, Sean.
Yeah, Andrew is far more savvy at this than I could ever possibly be. But just the fact that he still has $20 in his wallet, I like that.
Yeah, it's a very good chat. It's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 14th of May, 2024. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.